Welcome to the Doctor's Eyes Only podcast, brought to you by Vestia Personal Wealth Advisors, where we are on a mission to help the highest caliber physicians achieve wealth that matters. Hello, everyone. Welcome to another episode of the Doctor's Eyes Only podcast. I am your host for today, Lauren Oschman, and today we are going to be talking about a topic that I'm actually really looking forward to because it's something I myself have some questions about, and also something that we've been getting a lot of questions from doctors about over the past few months, and that is homeowners insurance and how to make sure that you have good coverage, that if heaven forbid you were in a situation where you experienced a total loss, you needed that insurance to rebuild your house, you could feel confident that you were in a good position to file that claim and get paid what you think you should get paid to move forward. So I have joining me today, Doug DeShong. Doug is a seasoned insurance agent with over 25 years of experience specializing in personal insurance for successful families. Doug holds his MBA and has expertise in helping his clients determine the proper insurance packages to fit their needs. In his free time, Doug enjoys spending time with his wife, Courtney, and their three boys, Jackson, Jacob, and JJ. He also enjoys boating, leading his son's trail life group, and playing the violin. I love that little personal snippet there in the end. That's so fun. Welcome, Doug. I'm so glad to have you here today.
Thanks for having me, Lauren. I appreciate it.
Like I said in the intro, the reason I wanted to do this is just because we've been getting a lot of questions recently, given we've seen so many natural disasters that have impacted people very materially in terms of their homes. We've seen hurricanes in the Carolinas and in Florida, the fires in California, most recently tornadoes throughout the Midwest. And so we have doctors coming to us, and something that we're trying to proactively help our clients do is take a look at the insurance that they probably put in place when they bought their house a number of years ago, have maybe just renewed annually since, and actually look at, if you needed to use this in the worst case scenario for like your house burned to the ground, would it actually pay you enough to rebuild your house? And what do we even look at to figure that out? Because I pull out my declarations pages and I see a lot of terms that I don't really know what they mean. Thankfully I do, because I have people like you I can call who can teach me these things. But for our listeners who get those papers in the mail every year, put them in their file box or whatever, what do we need to be looking for to understand what coverage we have on our homes?
That's a good question, Lauren. So what my recommendation is when you receive that packet, at some point within a few days, look at it. So get it out, take a look at it. Usually the insurance carrier will notify the insured if there are any changes this year in that policy. So the first thing we're looking for is any changes. Has there been any coverage changes? Have there been roofing changes? Has there been a deductible added, a 1% deductible or 2% deductible? Have that been added to your policy? So if you just let that policy go and sit in your filing cabinet, you might be missing some important information. So the most important thing to start with when you're reviewing that declaration page is reviewing your coverage A. So this is the amount of coverage that you have for that dwelling. So if you just paid $2 million for your home and your declaration page shows $800,000, then that needs to be something that you look at. And you want to start with your agent. Call your agent first and say, agent, there's a difference here on my coverage A. Why is that so? So that's the first thing that you want to look at. The second piece is replacement cost. Do you have guaranteed replacement cost on your home? What that means is if you have a total loss to a fire, for example, that it's going to replace that home with like, kind, and quality. So if the house goes down to the ground, regardless of what that coverage A limit is, if you have guaranteed replacement cost coverage, they would pay for that. So the first thing you want to look at is your coverage A amount. The second piece you want to look at is, do you have guaranteed replacement costs? Now, most companies don't have guaranteed replacement costs, Lauren. So those
Okay.
are the kind of policies that you're going to want to look at to see, do you have any extended replacement cost coverage at all? So, for example, if you have that $1 million coverage amount and you have an extended replacement cost endorsement on that policy would extend an additional 25% or 50% of guaranteed replacement costs based on what that endorsement is.
Okay, so I want to backtrack a little bit. So that coverage
Mm-hmm.
A amount, you use the example of you just paid $2 million for your house, I think you said, and then you look at your coverage A amount on your declarations pages and it says 800,000. Now, in my experience, that number on the coverage A often does not equal the full like Zillow value of your house, right? Because some of the value is the land. Am I understanding that correctly? So it's like they're actually looking at the value of the dwelling itself.
That's right, Lauren. So in an standard insurance contract for a homeowner policy, land is not included in that figure. And land values, as we all know, those have gone up tremendously over the last 10 years. So you could literally have a home that you paid $2 million for, the land be worth $1.2 million, and the home be insured perfectly correctly at the 800,000.
Got it. So the question there is just, is that amount accurate based on where your house is located? And what is, like, if you were to add the value of the land and the value of the actual home on the land, would that equal the total value of the property in all?
Yes, that's correct.
It strikes me that there's a difference between having someone like you, and I know you work with clients pretty much nationwide, right?
That's right.
So, okay, so having someone like you where I actually call you and I say, hey, Doug, I'm buying a new house. This is the address. You are going to take a look at it. You're going to get me set up with a high quality carrier who's probably going to send someone out to do not an inspection, but they're going to actually look at the property and figure out like what would it take to rebuild this to figure out that amount, versus if I'm going to go to kind of your like those major insurance companies that advertise to you all the time on TV or online, and you're just going to fill out a form and they're going to kind of assign you a value, I'd assume based on maybe some rules of thumb or something like that. How important is it to be working with someone that's actually putting some personal effort into making sure that these numbers are correct?
Well, Lauren, part of this really comes down to like one thing, and that I don't know if you can see this, but this is my cell phone. So anymore, companies have 800 numbers for everything, and you're not able to get a hold of a live person, let alone the same person. And so when I bring a new client on, that's the first thing I give them. A lot of times they call me on my cell phone. It's Saturday, 1:00 p.m. You have a question on your insurance, and it's really important to you. Give me a call, and we can talk through that. So that's an important piece of being able to reach out to your agent, number one. And number two, have someone that does have that expertise to make sure that your home is insured properly by doing those replacement cost estimates, making sure that the insurance company comes out and inspect the house. Those are all things that are important that an agent should be doing. And if they're not doing that for you, then I would suggest at least getting a second opinion.
I think that's great, because I think that's something that I've learned from working with you with some mutual physician clients, is that having that person that we can rely on who actually has some expertise and who can work with these carriers so that we're not the ones calling the 800 number is really important. So I want to go back to the replacement cost, because this is something, especially post-pandemic, I know this comes up even when clients will go try to get like a home equity line of credit. Banks are looking at their homeowners insurance policies, making sure that, if there's a loss, are we actually still going to have an asset that can be like, is there going to be money there? And is it going to be commensurate to the value that we're loaning you in this home equity line? So that gets a little into the weeds, but it kind of boils down to this, the coverage A and then the replacement cost. So you mentioned having guaranteed replacement cost is the best. So that's ideally what we want to see. You said There are a lot of carriers that don't offer that option. And that kind of makes sense because that's like an unlimited ceiling, right? Whatever it costs is what they will pay. Then you mentioned this extended replacement cost, I think is what you called it. So you said that could be 20 to 50% maybe. Are there other things that you could see there other than those two options, or are you going to see one of those two?
That's a good question, Lauren. I think just to backtrack a little bit, the first thing that you want to make sure of on your policy is that you do have a replacement cost policy. This is not talking about the guaranteed replacement cost. This is making sure that your insurance carrier settles your claim based on replacement costs versus actual cash value. So with replacement costs, the way that works is they do not depreciate your claim. So if you had a hailstorm, for example, and you have a $50,000 roof replacement and you have a $10,000 deductible, then you would receive a check for $40,000. Some companies are adding in actual cash value, so they're depreciating that roof. So for a $50,000 hailstorm, for example, they might depreciate it $20,000 if it's 20 years old. And then you have your deductible and you're getting much less of a settlement.
So that's a huge difference.
Huge difference.
So that's a key thing that someone would need to look at if they don't know if they have this replacement cost versus actual cash value. I assume that it would cost more money to get the replacement cost, but I just had this conversation with a doctor yesterday, and when we kind of talked through it, they were like, it doesn't really matter. I mean, if it costs more, it makes sense because this is our most valuable thing. It's our most valuable asset that we own. We want to make sure that it's well protected if, again, heaven forbid, we were to experience that total loss.
Well, Lauren, sometimes the actual cash value endorsement will actually be added as an endorsement to your homeowner policy. So you're looking through your homeowner policy and you see water backup coverage, which is good, and it has a limit. And then you'll have earthquake coverage, for example, and it'll have a separate limit and it'll have a deductible. But then you'll see actual cash value. So you look at that as, oh, that's a positive. I have actual cash value. But that's actually a negative. So if you have actual cash value anywhere on that policy, particularly on the roof, that is a sign to at least call your agent and see, do I have any additional options? A lot of the actual cash value is thrown on there due to the age of the roof.
Okay. Yeah, that's great. I think that's great advice. Okay, so we've looked at the policy. We understand what kind of coverage we have. Now I want to kind of change gears a little bit into something I've seen a lot about on social media in particular in the wake of some of these recent disasters. And I keep seeing these videos that say, hey, advice after I've gone through this claim is walk through your house and video what you own. Talk about what's in your house. That will make the claims process easier if you were to have major damage that you would need to submit a claim for. So I would love to hear from you, someone who helps clients submit claims, someone who works with these companies to process those claims. Is that good advice? Should we all be doing that? Or if not, what should we be doing kind of at a minimum to have an inventory of what it is we own?
Well, inventory, it's one of those things, Lauren, that once you've been through a claim, then you understand how important that is. Because what happens is you'll have your coverage A limit, which is the amount of coverage that you would have on the house itself. Mm-hmm. And then you'll have a separate limit for personal property. Mm-hmm. So that could be 50% of coverage A or 75%. But if you have a large loss, the company just doesn't give you a check for your personal property limit.
Got it.
They say, Lauren, tell us what you have and we'll write you a check. Well, if your house has been hit by a tornado or you have a fire, all your stuff is everywhere. You don't remember what you have. So the idea of an inventory is very, very good to have. Pictures are very important. So go in and just take a picture of each room. You know, we have all that information. We have that data in the cloud. It's safe. Yeah. That's probably the easiest way to do it. And then if you have a lot of antiques, if you have a lot of valuables, hiring a company that can do an inventory and they'll continue to do that inventory for certain years and they'll keep all the data records, that's an option too. But those are more expensive options.
I've talked with some doctors that have they have extensive like collectibles. They'll have like a sports paraphernalia collection that's very valuable. They'll have maybe artwork that they collect, jewelry, certain things like that. Is there a certain value maybe of a collection or something where you would advise that someone use a third party to have better record of that?
I would say $1 million.
Okay.
So if you have $1 million collection, particularly if it's more than just 3 or 4 pieces.
Okay.
So if it's an extensive collection, you have 100 pieces, having that inventoried is very important, because what happens is someone will pay, for example, $5,000 for a painting 20 years ago, and that value, they insure it for $5,000, but they were up and coming. It was an up and coming artist. Now it's worth $30,000. So not only having that inventory, but also having it updated from time to time just to make sure you're insuring it for the correct value.
Yeah, that makes a lot of sense. I think that's really good advice. So I like this. I'm going to take this as homework for myself because I have not gone through our house, and we only bought our house a few years ago. So, it fills up over time. And taking those pictures, some of it will be a little bit of a mess because I have 3 small children. And so our house is never really in the best of conditions. But I like what you're saying. It's like, don't wait. You can always take new pictures later. Go ahead and take those pictures. Know what furniture you have, what TVs you have, what you own, so that it could be replaced if it needed to be, without you having to sort through email online purchase confirmations to figure out what you bought. That sounds maddening.
Well, even in our offices or where you're located, Lauren, if you turn around and there's a bookshelf there, just taking a picture of knowing what's on that bookshelf, because it could cost $2,000 to replace that. But if someone would ask you, what did you have on the bookshelf?
I wouldn't know.
Right.
I would remember maybe the top 10, and then the rest of them I'd be like, I don't know. Because these are books I've read over a decade or more. And actually, you mentioned this. My husband has a lot of philosophy books that are, some of them are limited edition, or there aren't maybe new copies being printed or things like that. And so having an idea of what all he has there is something I've never thought about until we're having this conversation. Okay, so I think that's great. That helps us with what should we be looking for in the coverage. That helps us figure out what we should do to actually have a record of what we own if we did need to navigate a claim. My final question, or kind of topic area of questions for you, is really just related to how should we be thinking about particularly homeowners insurance. I know you do other types of insurance as well, but particularly homeowners insurance moving forward, because I think, people are talking about the fact that it may be harder to get insurance in certain areas. The insurance that's available might be more expensive. We've experienced, even here in Nashville where I am, there are certain carriers that aren't offering coverage anymore. And so, I'll have doctors that get a letter that says, hey, we're actually not renewing your policy after this year. I don't know how common that is across the country. What are some things based on your experience that you would say, like, how do we actually navigate making sure that we retain good coverage, that it's adequate, competitive, those kinds of things?
Lauren, that's a really good question. When it comes to, just to give you a little bit of a backdrop, over the last 10 to 15 years, home insurance, property insurance will go up every single year. It will not stay flat. And some of the increases that I have seen, I have never seen it this bad. So you have clients that their insurance isn't going up 10 or 20%. It's going up thousands and thousands of dollars a year, from $5,000 to $20,000, for example, in some areas. It's a big increase. Getting to the point where they just can't afford it.
Yeah.
And so one thing is if you cannot afford your insurance premium, then you're going to have to look elsewhere. You're going to have to see what options are available. And some of those options that we typically look at, I know it's simple, but what is your policy deductible? Is it still $2,500 or is it still $1,000? Is that something you can bump up to 5 or 10,000? Are you getting all of the credits on your policy as you should? Can we quote unquote bundle this for the auto and the home discount? Can we make sure your umbrella is with the same carrier? So all of those things will allow us to make sure you have more of a competitive plan.
So the deductible, I think, is a great point, and that's one that people often don't think about, because I know I'll have new clients come in and I'll look at their coverage that they have to see, hey, should we get a second opinion on this, or does it look like, kind of the things that I know to spot check are in good order? And sometimes those deductibles are very low compared to what a typical physician would have in cash reserve. So most physicians, at least that we're working with, they could handle a $10,000 deductible. And anything that's under that, really, they probably shouldn't be putting in a claim for anyway, because my guess is, I'm going to ask you if this is true, that probably impacts some of those carrier decisions, maybe to increase rates or to renew or not, is if you're making more frequent claims for smaller things versus if you're paying for those out of pocket and saying, well, really, it's going to need to be north of $10,000 for me to file a claim anyway. So that's a more reasonable way to structure the coverage.
Yeah, Lauren, the insurance companies look at claims a couple of different ways. They look at one from a severity standpoint. That's how big was your claim? Mm-hmm. And then the second piece they look at is frequency. How many claims are you turning in and what type of claims are there? I mean, it's better to have one $300,000 hail damage, roof, weather-related claim than three $10,000 water claims, because insurance companies are looking at those type of claims as preventable. There are things that you might have been able to do to prevent those water claims, like purchasing a water shutoff system that's automatic. So if you have a leak with those leak detectors, it can just shut your water off. Or if you have a leaky pipe that maybe you just didn't know about, but should have had your plumber inspect or look at those things and be a little bit more proactive. So being proactive on your maintenance, make sure that you have those your central alarm systems activated, that they're not just in the house, but you're activating them for both fire and burglary and temperature monitoring. It's one thing having to spend the money on those systems. I understand that. But it can save you tons of time if you can keep those claims to a minimal. So if you have a $4,000 water claim because you had a water shutoff system and you had someone in there quickly versus an $80,000 loss, you spent some money proactively to save you thousands, particularly if you're going to pay for some of those out of pocket.
I think that makes a lot of sense. And something that you and I had talked about more recently is that you can actually help clients make those decisions. And so you were like, I would rather someone be working with an agent that they feel like they can pick up the phone and call and say, hey, here's what happened. Should I file a claim for this? And kind of get your expert opinion versus someone's trying to handle it on their own. They file the claim only to realize later that they didn't really get a huge value out of it. And in fact, it might have docked them when it came to, other things that they want to have with their coverage going forward.
I mean, I think it's always important to have someone to discuss your claim with other than your parents of what should I do? This happened. I'm not quite sure if I want to turn this claim in. But what does that look like if I want to handle something like that out of pocket? And just have someone to be able to discuss that with. Because sometimes with these carriers, I'm not too familiar with the direct writers, but a lot of times if you call in a claim to ask a question, I mean, you just reported the claim.
They'll just start the process of filing a claim for you. Yeah.
Because they're almost obligated to do that.
Right. Whereas you're kind of in the middle, you're not employed by an insurance company. You are employed by a brokerage that works with various insurance companies. And so you can advise your clients on how they should move forward with something, or maybe ask a more general question of a carrier and report back without actually starting that process of filing a claim.
Yeah, that's right. And there's sometimes, Lauren, that you'll get into a claim and we'll get a couple weeks into it and we just have to turn it into the carrier and let them handle it.
Yeah.
Particularly when it's a vehicle claim or something that another party's related into. And again, that's a conversation for a different day, but to just make sure that the carrier is notified promptly that if they are going to turn in a claim, that they're cooperating with the insurance company when they're investigating things. You know, if they call you, call them back. Don't wait 3 weeks to call them back. Protect your property. So if you have that hailstorm or wind damage, hire someone to put a tarp up there. You know, get things out of the way. Protect your own property. If you have an antique bedroom set underneath that roof that's leaking, move that. Move it out of the way.
And then, I mean, part of this, because obviously I'm doing financial planning, and so I'm thinking about the cash flow and how do we be prepared for things like this. And so something that I've started talking with doctors about as they're thinking about a home purchase decision, number one, we're trying to account for the fact that we need some flexibility in the cash flow because insurance rates might go up over time, especially depending on where they're purchasing. If this is a beach house in Florida, that might be a different conversation than if it's, kind of a primary residence in Nashville sort of thing. But then also having a line item in your cash flow where you are putting some money aside in reserve for those inevitable home repairs that are going to come up. Because like you said, being more proactive, like number one, we don't want to be turning in small claims. And so if we always have some money available for, we need a new air conditioner, we need a new this, we need to repair this. And two, if you feel confident that you can handle those pretty quickly without compromising other financial goals because we've sort of thought about that in advance, then that can really pay off in the long run.
You hit the nail on the head. I mean, we're kind of to that point in the industry where we're going to be saving money for roof replacements. It's just getting to the point where insurance companies have 1 or 2% wind hail deductibles in a lot of areas. Well, if you have a $2 million home, 2% is $40,000. So that can go a long way when it comes to replacing a roof. So just, putting that $3,000, $4,000, $5,000 away when possible into that fund, because it's inevitable that we're going to be paying those claims out of pocket here in the future, particularly when it comes to storm damage on properties.
I think that makes a lot of sense, and that's good to hear. Good to hear from you, keeping an eye on the industry the way that you do. So I think kind of to wrap up here, what strikes me as kind of a theme in what you're saying is there's not really, I have not heard you say that this is a great carrier, this is not a good carrier. It's really about the coverage structure and then how do you get help when you need it. So being able to say, I have the right coverage A amount. I have ideally this guaranteed replacement, or I have at least something that has a replacement value element versus this actual cash value. That's not a carrier thing necessarily. It's a structure of your policy thing. And then how do you decide how to handle these things as they come up? How do you make sure? Because I think based on what you're saying, we should probably be reevaluating every 2 or 3 years. Do we have the right coverage? Is this still the right company to have coverage with? Would there be benefits to moving to a different company? Things like that. I feel like that's how the insurance industry is kind of going. And so having an agent that you call versus an 800 number, I honestly don't think you can put a price on that. And in a lot of cases, an agent can get you set up with a policy that financially makes more sense anyway, because either you get more benefit for what you're paying, or you can keep the same benefits you already have and maybe pay a little bit less for some of those bundling, deductible changes, things like that you were talking about. So I'm curious if you have any kind of parting thoughts to that end, just about like, what is the most important thing for someone to be thinking about when it comes to protecting their home?
We used to have a marketing rep that would come by and say, it's all the same until you have a claim. Like, everything's the same on your policies in another carrier until you actually have a claim and you have to use it. Then you're going to discover how good is my policy? Mm-hmm. Do I have those features in place? Some people, they don't even read their policy until literally there's a wildfire 100 yards away from their house.
Yeah.
They don't know. Or they see the wildfire and then that's when they start looking. Oh my goodness, how's my insurance company going to respond? So what my thoughts are, you want to have that peace of mind before that claim happens.
Absolutely.
Right? So take the time now. If I did have that wildfire, how is my policy going to respond? Do I have loss of use? Is it unlimited? Do I have guaranteed replacement costs? What is my deductible? Is it going to be my policy deductible or is it a 2% wildfire deductible? Those are all things to make sure that you're reviewing and you understand, hey, when I do have that claim, this is how my policy is going to respond.
I think that's excellent advice. And I love what you said. I mean, this was probably 20 minutes ago, but I love what you said, which is it doesn't hurt to get a second opinion. So if you have an agent that you trust, that's great. After having listened to this and gotten some of these takeaways, reach out, say, hey, can we have a phone call? Or hey, can you answer these questions for me? And just ask those questions. Here in Nashville, I'm less worried about the wildfire, but we have tornado warnings regularly. We have flash flood warnings. And so if I were to need to use the coverage, that's not the time to figure out that I don't have what I thought I had. And I think the reason that so many people don't pay attention to their policies is because we don't know what we're looking at. These terms like actual cash value, to your point, Doug, it's kind of all garbly goop unless someone tells you what it means. So reach out to your agent. If you don't have an agent, we'll make sure to put Doug's contact information in the notes for the show. You can reach out to him. You can reach out to your Vestia advisor. We can get you in touch with someone who can give you that second opinion and help you understand. Do you need to call your current carrier and just ask for a couple changes? Or is this something where we really need to redo your coverage structure to make sure that you're well protected? Well, thank you so much, Doug, for joining us today. This was very illuminating for me. Like I said, I have some homework to go home and take those pictures and make sure that we have good files about what we own. I hope I never need to use it, but if I do, I want to have it. And I just really appreciate your taking the time to share this information because this is going to help a lot of doctors out there gather more peace of mind around protecting what's a really important asset to them.
Thanks, Lauren. I appreciate the opportunity.
Thank you all for spending your time with us to listen. Please do subscribe to Doctor's Eyes Only if you don't already. We have lots of great episodes coming up. We are basing a lot of these episodes on either guests that you all recommend to us or on your questions. So if you know someone that we should have on the show, please leave us a review. You can leave us those notes and let us know. And until next time, take care. Thank you for listening to the Doctor's Eyes Only podcast. We hope today's conversation advanced your journey toward wealth that matters. Make sure to follow and subscribe so you don't miss a single one of our amazing episodes. Thanks so much, and we'll see you next time. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Vestia Advisors, LLC. The content has been made available for informational and educational purposes only. It should not be construed as legal or tax advice and is not intended to replace the advice of a qualified attorney or tax advisor. This information is not an offer or a solicitation to buy or sell securities. Investing involves risk, including risk of loss. Before investing, you should consider the investment objectives, risks, charges, and expenses associated with investment products. Investment decisions should be based on an individual's own goals, time horizon, and tolerance for risk. Past performance is no guarantee of future results. Diversification and asset allocation do not ensure a profit or guarantee against loss. Consult your financial professional before making any investments. Investment advisory services offered through Vestia Personal Wealth Advisors, Vestia Retirement Plan Consultants, and Vestia Advisors LLC. Securities offered through Osdale Financial Partners, Inc., 5187 Utica Ridge Road, Davenport, Iowa, 52807. Member, FINRA, SIPC. Vestia Personal Wealth Advisors, Vestia Retirement Plan Consultants, Vestia Advisors LLC, and Osdale Financial Partners, Inc. are independently owned and operated.